I get a lot of questions from borrowers and potential borrowers about the importance of a credit score when it comes to getting a hard money loan. In this episode of the Hard Money Minute, I'll be discussing the role credit plays in an underwriting decision. The first step in buying a home is getting pre-approved by a mortgage lender. A typical pre-approval starts by pulling your credit and looking at your income. Now, most lenders use a credit score as the jumping off point in determining the credit worthiness of a borrower. Even many hard money lenders, especially those that are bank or institutionally backed, they're going to have minimum credit scores that will preclude credit challenged borrowers. Hard money is so named not because it's hard to get, but because the loan is primarily based on the hard asset. These types of assets include things like real estate and precious metals that have an innate underlying value to them. So for a hard money lender, the value of the asset is the number one thing that is important when it comes to the evaluation. It's the collateral that secures the loan. Secondarily, a hard money lender is going to look at the borrower themselves. This evaluation isn't solely based on the credit score. In fact, there are a lot of factors that are much more important than credit. Things like a track record of successful execution on previous projects and available capital to invest in the deal may hold more weight. At the end of the day, the lender wants to be sure that the borrower has the ability and the intent to pay back the loan. And here's where the credit comes into play. Credit scores are based on a number of factors. The calculation includes, the length of open credit lines, the amount of debt used versus the available credit, timely payment, and debt to income ratios. Ultimately, the credit score becomes a pretty good indicator of a borrower's track record on performance with their debt. So how important is your credit score? Well, that depends. If you have a smoking deal and you have plenty of cash, it's probably not that important. If you have no credit score because you have zero debt and pay cash for everything, like one of my clients, it's not important at all. But if you have poor credit, no money, and a marginal deal, it's going to be very difficult to get funding. At the end of the day, lenders don't want your property. Their objective is to make good, solid loans that perform and pay off. They want repeat borrowers who do what they say they're going to do. Credit isn't the most important part of getting a hard money loan, but it's part of the puzzle. Good credit provides more opportunities, and the more opportunities we have, the better our chances of consistently reaching to the kind of success we want.